Good morning, everyone. Welcome to Trade Love Academy's weekly Zoom here. Today, we're going to be learning how to pass our funded challenges with Top Step, and we're going to go over trading ES futures. We'll mark up our charts, and we'll set ourselves up for success for this Wednesday. All right, you guys, drop some threes in the chat if you guys are ready. If you're with me, if you're up. I know it is Wednesday, August 20th. It's 8 a.m. How are you guys feeling? Y'all ready to get started? Let's see. I'm going to share my charts here, and we're just going to hop right into the markets. Let's see. Okay, so today we do have FOMC meetings. Our first step of the day before we start trading is to check to see if there's any high impact news that is coming out. You can use Forex Factory, you can use Econo Day, but just making sure that you are alerted or you know what times to secure your trades while trading today. Alrighty, so 2 p.m. FOMC meetings. Let me make this a little bigger. Alrighty, there we go. Perfect. So that's at 2 p.m. Eastern. So it's a detailed record of FOMC's most recent meeting, providing in-depth insights into the economic and financial conditions that influence their vote on where to set interest rates. So very important meeting coming out here today at 2 p.m. My suggestion is always to put like a vertical line on your charts. This is S&P 500s. So around 2 p.m., just to put a vertical line, just to let you know if you're still trading at that time, or if you get like locked into, the markets, definitely a pro tip. Vertical line on your charts at the time where there is a high impact data release coming out, just to bring you back in focus. Sometimes I'm trading and I'm so locked in the charts and I totally forget that, news is going in at this time. Forget that those hourly candles are coming in. So I want to be intentional, want to stay focused in the market. Alrighty, so what is everyone trading this morning? Let me know, or if you haven't started trading this morning, what is your pair? Let's go back and clean up this chart. And so we can mark up ES, so S&P 500 futures. We'll practice putting that in our demo accounts, and then we can look at gold, or that's GC, or we can look at the Dow, whatever you guys want to take a look at today, and mark up our chart so we can practice our entry points. And then we will also finish speaking about passing our funded challenge. So drop the pair. Okay, Charlotte already said she's trading US 30. So we will mark up US 30. We'll do a top-down analysis of that, just so that, we're marking up other pairs. I like for us to focus on ES, especially when transitioning into the futures market, because of the risk associated. The pair moves a lot slower than the other indices. You're able to manage your risk a lot cleaner there. Okay. So, usually I like to keep two different layouts here for my charts. So one that, I just continue to build on, marking off at a higher kind of level there. And then another chart that I try to keep for intraday trades. That way, I don't have all these crazy lines all over my charts for the big, picture kind of items here. So that's always an option. You can have different templates and save them and come back to your charts. So, alrighty. Okay. So before we hop on the charts and look at some positions in the market at a higher level, let's finish talking about getting started with Top Step. Okay, so last week we went over, let's see, let's pull up this Top Step so you guys have that here. I know Charlotte says she has an account. Anyone else trading Top Step or interested in trading with Top Step? What happened? Oh. So more information. We're learning how to pass those challenges. I'm going to try in September to put together a workshop for us. It's a 1-week workshop to get us kickstarted on our challenges there. Okay, so remember, Top Step is a prop firm in the futures market. So we are using these firms there to help us practice our strategy, practice trading, and taking these payouts and then funding our live US based accounts here. So it's a way of risk management. So we don't want to be risking our own capital in the markets while we're still learning our strategy, while we're still practicing healthy risk management and sticking to our trading plan. So this is a way to kind of give us a little buffer there. And once we get these payouts, you can use them. We're going to come up with a plan here. So I always tell people, take half of your payout for, your own personal use, and then deposit the other half into your Tradeovate or your Trade Ninja or whatever live account you are using to trade your futures. So you never just want to rely solely on these prop firms. Remember, you want to have your own accounts, but they're such a great tool with getting to that process. So last week we went over what Top Step was. We went over, how much each of their accounts cost and what the targets were for that. We went over, their different features. So their charts, we look at their charts, Top Step X. We went over all their resources, their daily stream that they start from I think they're started right now, 8:30. And they stream all day, giving their insight into the markets. Again, you don't use them for buy and sell entries, but to help you and to bring you together with other traders. See what you guys are how you guys are feeling, how we all, are feeling about the markets, how we would manage our trades, and just giving tips. It's super fun, especially if you're like me, kind of trading all day and you want, some good background, not noise, but education and a bunch of little corny little dad jokes flying around all day. It's pretty fun. Okay, so once you have one rule here, you have your consistency, you have your profit target. So let's just say if you grab a 50K account for $50 a month, within that month, your goal is to try to profit $3,000. Your maximum risk is $2,000. If you are able to, hit your profit target by the end of the 30 days, then you will not be charged again for your monthly price. You would instead pay your activation fee, so that now you are set up for an XFA, an express funded account. What that means is that after you have 5 days of making $125 or more, you can request a payout. So the next step, so we talked about the rules. Again, our consistency target, they do have a consistency target. It can't be more than half of your profit target. What does that mean? So it means on one day, you can't make more than half of $3,000. So $1,500. You cannot make more than $1,500. If you do, perfectly fine. But now you're going to have to make more than $3,000. So let's just say on one day, you make $1,600. The next day, when you log into your Top Step dashboard, you're going to see you need to make an additional, say like $200, whatever the amount is, they let you know there. The easiest way to avoid that is very simple. In your Top Step dashboard, you have settings here. I'm sorry, in your Top Step X. So you can go into your settings, come right over here to your risk settings, and set a daily profit target. Set it at 1500 so that you never go above that. The market is going to liquidate. You can choose to liquidate and block or liquidate and close. Do nothing really doesn't help us. But that will cause, if you had any open trades and you're just locked into the market, it will just automatically block your account, lock your trades, close your trades so that you don't go over that amount. I would say I would set it to 15, 20, just because to give it a little buffer, so that, because sometimes I've had it where it closed out at like 14.88 or 14.99. So give it a little buffer there. And again, you always check your dashboard before you start any trade to let you know exactly where you stand on that day while trading. Oh, where were we? Alrighty, perfect. So that's the consistency rule. Remember, all these rules are set up. They're not, to have you try to see if you can not pass some kind of like, we used to have these prop firms that made the rules so hard to kind of follow and meet there. So you were never actually getting into your XFA. Top Step isn't like that. They're just trying to help you to create healthy habits while trading. So it's pretty cool. Alrighty, so then once you get to your XFA, so you've passed your combine, you're in your XFA, every 5 days, minimum of 150 per day. And then for the first 30 days, you're going to split your profits with Top Step in half. So let's just say first 5 days, your account is at $1,000 and you want to take a payout. You've made more than 150 every single day for those 5 days. You're eligible for a payout. From your $1,000, you're eligible to take out $500. And that is going to be like that for 30 days for your first 30 days worth of profit. When you're taking your payouts there, you're going to split that in half with Top Step after you keep 90% of your profits. Remember, we're trading with their capital when you're in your XFA, even though it is simulated account there. So you're practicing your strategy, and that's how your payouts are being able to be taken. After those 30 days, you guys get called up. You get called up into the live account where you're trading in a live market setting. You're not in a simulated account. They give you, an account there, and you can take up to 90% of your profits. So once you build those good habits, once you prove to Top Step, hey, I'm a good trader, you can trust me to trade for your firm, boom, you pass your probational period, and then you're able to get into a live account. It is challenging because we're not as organized as we should be. We're not taking payouts when we should be. Do you know how many payouts I would have taken if I would have kept it with the every 5 days? So let's get organized really quickly and go over a couple of techniques that you can use to pass your account. So let's see here. All right. So you first have to figure out a couple different things. So you need to find out what pair you trade, what time, during what session. You want to know your daily risk. We know the max risk is $2,000. And then you want to know your daily profit. And then how many days a week are you trading? So take a moment here, you guys. Ask yourselves these questions. Do you know the answer? Is it consistent? Are you just hopping in the markets and just trading, whatever? So let's just let's do it together. So let's just say we're trading ES. We're trading for the London / New York Open, or the pre-New York Open. Daily. Okay, so remember, you have 2,000 listed to start at a 50K account. Let's just say this is a 50K combine with Top Step. Okay, so we know that our max risk is $2,000, right? So I would say that when you are trading this account, do not look at this account as a 50K account. Look at this account according to your drawdown. You can only risk at the max $2,000. That's not a lot of a lot of leeway to take major swings in the market. So you have to take a look at your daily risk. So I like to take that $2,000 and divide it by 5 so that there's no way that you can blow your account in a week, because you're going to set your risk to a point where your account is going to lock up. Again, you come over here to your risk settings. So if we did 2,000 divided by 5 days, that's going to give us $400. So our max loss per day is going to be $400. If the market hits if we lose $400 in that day, we're going to the Top Step X. Sorry guys, I didn't have my coffee this morning yet. Top Step X is going to liquidate and block your account. Save these, lock your risk settings for the day. That's the first thing that I do. After I check, I keep saying the first thing, I check the news. I go into my Top Step dashboard. When I come into Top Step X, I come into my settings. I lock in my risk for the day. That way you can't change your parameters. You can't just say, oh, well, I'm almost close to 400. Let me increase this to 500 just this one day. You're locked in for the day. You read your trading journal. You lock in your risk. So now there's no way that you could make over 1,500 or that you could lose under 400 for the day. How comfortable are you feeling already trading, knowing that 1, there's no way you could blow your account, and 2, there's no way that you're going to go over your max target profit so that you have to, spend more days in the market. So just lock yourself out, set your parameters, and alrighty, so our daily risk per day for this account would be $400, and our profit. Now, do we have to make $1,500 per day to pass our account in 2 days? If you want to pass your account in 2 days, put 2 days in the chat. Let's see how many people really just are you impatient? Do you just want to pass it? Or do we have those of you that want to pass their account in 30 days? You don't mind taking your time throughout the week, and throughout the month, just as long. Kelly wants to pass hers in 2 days. I hear you, girl. It can be done. I have passed a couple combines in 2 days there. That's not the hard part. The hard part is staying, once you get your XFA, is keeping with your risk management so that you are profitable, so that you are taking payouts when you are eligible, not at a certain price point. So when it comes to your 5th day making $150 or more, you're not looking at your account like, oh dang, I really didn't trade well this 5 days. My payout, if I split this, I'm only gonna be taking out $500 or $300. Now let me trade some more. Take your money and trade the next day. So don't look at those payouts and thinking, oh, I want to wait for my next payout, and I want to wait till I can take out $1,000 from a market, or 25. Once you're 5 days, once you're eligible, whatever amount that you have occurred, Go ahead and take it out and live to trade another day. So, well, Kelly's profit target per day is going to be 1,500. Well, we don't have to do that, you guys. Let's just say, how many days a week can we trade? Let's just say we have someone that's only able to trade 3 days per week. They're just trying to hold past their account. Kelly says 4, past their account, past their combine within that 1 month. So let's just say they're trading 3 days a week for 4 weeks, right? So that means they have 12 days of trading. 3, 6, 9, 12. Let's just say in 1 month, we have 12 days of trading. So now we're going to spread this $3,000 worth of profit that we need to make within 12 days so that we can come up with a daily profit target. Of course, okay, let's start from there. So 3,000 divided by 12, we're going to go ahead. That's so simple, $250. That's all you need to make for the month per day. Not risking more than 400. Now, when you see something like this, now that you know the minimum you need to make for those days is $250. Now, when you go to your settings for your risk, for your profit targets, even though you can still set it at 1,500 just to give you some room there, going into the market, once I hit 250, I'm good to go. If your trade closes $500 in profit, $600 in profit, you can go on about your day because you've hit your minimum profit target. That's going to allow you to pass your challenge at the end of this month. So you don't need to put all that extra stress on yourself. You don't have to make the 1,500 in one day. If it does happen, if the market gives you good motion like that, then cool. Yeah. So you can set your overall target, but you just take your time. Let's plan this out. The most I'm going to risk is 400. The minimum I need, of course you don't want to risk that entire $400 in that day. But you want to give yourself some wiggle room. You can plan to at least make $250 to $500 a day. And that's your goal. Once you come up with a plan, sometimes we just get into these situations and the only plan that we have is just to make money and pass the challenge. And we need to get a little bit more in depth than that. So something as simple as just setting out these little parameters. I know I asked everyone, do you have your trading plan? They're like, kind of not. Have something in writing. Your brain has to know what its task is. If you don't know what you're supposed to be doing and your only goal is making money, that's not enough parameters in this type of market setting for you to be successful. You have to have, have to have it all mapped up. Okay. Already dropped some hearts, like this stream, subscribe to the stream, show some support here if you guys understand and if this is a good kind of beginner's steps here to passing your trading combine with a 50K account. Does it all kind of make a lot more sense now that you're understanding the steps, what is required of you, in order to pass these challenges? And do you have an example or an idea of how you could pass a challenge in 30 days? Does that seem so hard to make $250 a day, 3 days a week? You don't need to be making, thousands of dollars every single day trading 2-3 hours. We could make $250 a day, right? Oh, Miss Charlotte's like, it does. She can. She has, right? All righty, guys. So we're done with Top Step. You guys know how to get started. You guys have all the resources that you need to succeed. And, we've broken it down. These aren't one of these companies that don't pay, your profit, or you have those, what was it that firm was doing, was saying, look, your IP address wasn't matching. And so they were denying people payouts for that. This isn't that. So, alrighty, guys. So, if you have another firm that you use that you think we should take a look at, we're always open. I'm always open to learning new things. But once I find something that has worked, once I find something that's stuck, once I know that I can reach a person at this company that they're in the US, I'm not risking any of my, money here, but the 50 and the $150 activation fee, or if you get the $150 account, but we're not risking our hard-earned money while we're still learning. And that's key, because we want us to be successful. And if we are still learning and we lose all of our money, it's not very fun, and it doesn't create a good environment for us to keep moving forward. Consistency. Oh, thank you, Kelly. Yep, let's go. Let's get it. So, fingers crossed, week-long boot camp next month. That's September. Now that you guys kind of have an idea of how to get started, we can, do a boot camp just to like boost us through and, make some more, learn our strategy in live time while trying to pass our combines. Alrighty. Okay, so let's go ahead. Let's hop on the charts. Let me go ahead and get us all started here. We'll do a top-down analysis. Start at the 4-hour. Who marks up their charts on Sundays from an overall time frame, or who waits till Monday? Let me just organize my charts here. 1 second. Charlotte, you do your charts daily now from the higher time frames just to make, okay. Checking out your, that is definitely a good habit, to just make sure at the higher that you do have that broader scope. We shouldn't really have to continuously, mark additional areas unless if, we break the support or resistance. So we've marked this up back in July, and we've just been adding to that and just letting us know what the market is doing on, a broader level. So we'll start with ES, since this is the pair that I've been consistently reviewing with you guys. Okay, and so as we can see, we've just continuously just been making higher highs. Every time we have a strong area of resistance on the higher time frame, we see that the market breaks past that level. So let's see here. So we had our resistance, we had the market. Let's try to look at this with clear eyes. We had the market kind of coming up here to the 63.30 area, and then pushing back down to the 62.40 price point, just ranging between these kind of levels here. And then finally, price was able to break this resistance level. So break above 33, kind of 30 here. We had the market making higher highs, really coming back to this area, this breakout. They did a break, retested this area, and the market continued to buy. Let's see, we had a gap here on July the 25th. Excuse me. But the market was just continuing to make higher highs. We see that the 3,400 area here was major. There was major support at this level. That was also a psychological price point. So those nice round numbers. We had a gap. And so price has just been trying to make higher highs. And then, I believe this was news. We had a break here, huge engulfing candle. This is a 4-hour candle. So this is a highly structured time frame. A lot of structure on this time frame here. Once we saw price though break below this support level of 3,400, it retested and then it continued to make lower lows. It broke all, once you see that, price is breaking structure, breaking below the previous levels that we had for support and just dumping here. Price came right back to this zone, this major level of support, 3250, kind of this area, 3250, 3440, 3240, kind of this zone where we had support. And then we see our candlestick we had a double bottom here giving us green candlesticks. This candlestick, green candle, was higher. It did close higher than the previous, this red candle. Then we had this nice engulfing candle. This would have been our indication that the market is now reversing. We're going back into our buys. We're having all of these nice 1, 2, 3, 4, 5, 6, 7 4-hour green candles. That makes sense. And then what happened here? Price just continued to make a higher high, higher low, higher high, higher low. Now we've made higher highs. The highest, right? ES has been S&P 500. It's broke that 6,500 price. I hate when they don't. Alrighty, so yep. And then once it reached this level of resistance here, we see that we had a little bit of a pullback, price breaking below this area of support at 64.63, kind of 60, that level, now making another lower low. So you really want to look to the left and look at these areas where there was support and see how the market responds to those areas. So if it continues to break through those levels of support, we might want to take a fib from this low to this high to see where we have a potential pullback area to see where, might be our price target for these sells before we see the market continue on with its buy. How do we feel about that? Was it easier to see? Of course it is, coulda, shoulda, woulda when we're looking back in time. But now looking at how the market and our candlesticks and just where support and resistance is placed just naturally here on our charts, it seems like pretty clear moves, huh? Charlotte says she does it on the daily time frame. Okay, so are you are you holding your trades? How long are you holding your trades? Let's see. The daily definitely, takes out a lot of that noise, all the way from April. We've just been having higher highs, higher lows, higher highs, higher lows. A lot of people like to look at the daily candle to give them an idea of, when there's a break in the next trading day. So for instance, this was our daily candle from August the 19th. So from Tuesday, zoom in on this, baby. Alrighty, so price open at 64.68. Buyers were able to push price to 64.7750. This candle closed at 64.32. The sellers were able to push it down to 64.19. So when we're talking about key levels, that might be if you're using the daily time frame, you can come over, put some horizontal rays at these price points. So that when you're in your new candle, your new daily candle, that kind of you have some price points. So for instance, this candle opened at 64.33. So that is where, the previous candle opened, and we see that price was able, let me see. Sellers were able to take their price down to 64.08. So once price broke 64.20, which was our previous daily low, that would have been our indication that, hey, we're continuing to sell to the lower time frames. So you can use those areas, those highs and those lows of the previous daily candle to kind of give you an indication if you're of trend, can give you price points. So yeah, using the daily time frame, you just have to know exactly what you're using your time frame for and for what. Alrighty. Okay, let's go ahead and label our charts. Remember, we are just looking. Okay, so our charting steps. We're on the 4-hour time frame. You want to gather at least 3 months of data to mark up your highs and your lows. So your overall highs, overall lows. So we had our 4-hour high before that broke. I like to keep these kind of labels on my chart. It looks crazy now, but remember, you can always mark up on one chart and then have a clean chart to scalp off of. I like to keep that there. I used to every week kind of erase and start from a clean chart, just so that because I used to get, like, it was information overload. It was too much crap on my chart. But that's also because I wasn't labeling. So I just had a whole bunch of lines, whole bunch of boxes all everywhere. And that was just overwhelming for me. And I didn't know but so many lines, was this line from the 4-hour? What was this? So now that I've become more organized and structured in my labeling, that has definitely helped me. But some people don't need all this on their charts. Perfectly fine. Do what works for you. I also keep my position tools. You can't see them on the lower time frames, but I do like to keep my position tools on my chart when back testing kind of helps me out as well. We'll clear this up as clear as we can get. On the 4-hour time frame, I can take off our EMA crosses as well. Okay, so we have our high here. This was our previous high. Again, we broke through, and then we had our lowest area of support, which was our previous area of support. Price kind of went into this box, the 62.60 to 62 kind of 35 area here on the 4-hour. So we have a new high. We have this low here. Right now, I am going to take a fib from this low to this high, just so that I have a potential area that the market may retrace to. Alrighty, so I see that 63.75 to 63.42. That's my 61.8, 50, and the 50 level here within my Fibonacci. That's also where my S1, S0 kind of levels are on my pivotal zones. So when I see, the target price kind of all around those magnetic levels, gives me more confidence there that we may see a pullback to this price area. So however you guys want to mark it up on your charts, you do so. I just have that box because I have so many other things on my chart. I kind of just don't want my fib with all those lines there. Okay, so if price continues to make lower lows, I'm looking for price to continue to sell and looking for a pullback to this area here. ultimately wants what? Once price breaks below this 64.10 area. Right now, what is the market doing? It was consolidating here. I mean, ranging here, and then price broke below this area of support. Now we're making lower lows. We might pull back to make a lower high before, it's never smooth movement. We always get a trick up, a little trick there around these areas. So we'll see if the market will kind of we have an idea because that the market may follow this pattern because it's done so in the past. So we have an idea. So if it continues to buy up, we'll cut and pull back to this breakout area here. Again, remember these green, these blue lines here were those levels from our daily candle. So if price breaks above this area, that would have been a good indication that we're going to start buying. If price breaks below that level, if you are incorporating your daily candles, your, those highs and those lows, that's how you would incorporate that into your trading. All righty, let's see here. Let me just stretch for a second. Oof. Okay, so okay, so that's what we're looking for on the 4-hour time frame. I'm going to remove these lines here so we stay relevant. Okay, so if you incorporate your channels or your trend lines, you can draw those on the 4-hour time frame. Next step, we're going to go to the 1-hour time frame and identify our support and resistance levels. Look for any. So we had our R8, our R7. We have price here at our S1 and S0 levels on the 1-hour time frame. This supports our idea that price may pull back and bounce up and give us that buy back to that breakout zone. So in this small pullback buy, if price breaks above 64.35, that's going to be another confirmation that we're in this, in this little pullback here. So those are the areas that I'm looking for on the 1-hour time frame. Let's see. Then from here, zoom into the 15-minute. And we do the same exact thing. So we're just making sure that we're trying to protect ourselves from getting tunnel vision and just being locked in and only seeing trend in things on one time frame. We want to make sure that we know what's going on overall and how that affects our scalping. Charlotte says she scalps. So, Charlotte, sorry, just seeing your candle. Can you again explain the importance of the daily candle? So the daily candle, in my opinion, helps us to spot the trend. So you're looking at those candles and those highs and low points in the opening and closing of those candles. Those can be considered key levels. So the next day, if you see price breaking above and below any of those key levels, those levels can be price targets. They can help you to identify trend. So if, the market breaks above or below any of those levels, those can be reaction points and help you to identify exactly what's going on in the market. Yes, so the wick, so the opening and closing of the candle just tells me where the market opened, where it closed. But those wicks tell you how high the buyers or the sellers were able to push the market and push that price. So I take the information of the wick. So if I'm looking at the daily candle, again, I don't use this in my strategy, but I know how some traders use it in their strategies. So that's why you saw those four lines, because I had the high, the low, the opening, and the closing of that candle. So there were four different areas or four different price points that were kind of key levels if you're using your candlestick. Okay. Alrighty. No, thanks for asking for clarification. And if you, where's my sticky notes? You guys have to remind me in the charts. Y'all know I will drop an article or a website or a cheat sheet that I find from, I'm not reinventing anything. I'm just gathering all the information that I've learned and just passing it on to my trading friends, you guys, and y'all do the same for me. So I have no problem getting some more. You guys have to tell me if you're visual learners, if you like written material, if you like or if you guys watch the videos, just when you need supplemental like resources to help you with these topics. I know how to best support, you get into those topics or understanding those topics, excuse me. Okay, so 15-minute time frame, we're doing the same thing. We're looking at the levels again. So right now it's near that 50 this S1 S0. We know that that's an area of support. So remember, when looking at these pivotal zones, we know that S&P 500, it really respects market structure. And these pivotal zones with this strategy kind of just, they use the S1 and the R7. Those are always my first take profit points. It's not like YM, it's not like the Dow where, price will really go to those R8 and those S0, those ultimate levels. So I definitely keep a big eye out for the S1 and the R7. So I have an overall take profit based on a fib here from this high to this low. See, like, if it's going to pull back to this area, that's going to be kind of the ultimate level. We're going to see if it's going to pull back to this area that there was support where we had this break. So we have a couple different price points, price targets here for ES. So first one is going to be 64.40. Second TP 64.45. And if we get really good momentum, buying momentum, then we'll see if the market comes up here to 64.60. Alrighty, so now with that, I'm going to come over here into my account, down a little bit on the day because I had a trade set up overnight. And of course, the market literally wicked me out. So let's take a look at it. So I entered at 64.21 here. Ooh. So around this level, let me remove this fib so I can. So I've been in this same, so I'm looking at this same idea. So I was in a long yet last night. When did I enter this? In 21.52. And so I was in at 64.20. So probably entered around these candles here, waiting for that break. And I had my stop loss down here at 64.14. So price just came and took me out by just a couple little points here, about 4 little baby points. But I couldn't risk more than that, especially for an overnight trade. I mean, I guess I could have brought it down here to, I could have went down to 64.10, which would have been 10 points. But again, I would have got and knocked out by a couple points anyways. And so I didn't want to risk more than, $200 there overnight. But that is just to say that when you do have those trades that you're holding overnight, number one, I definitely I should have just kept in with a smaller lot size. So just with the um, three contracts there. But it's all good. That's not anything that's going to blow my account or anything like that. But I like to review what I was looking at, show you guys that losses happen all the time and how how we can make that back. Okay, so price is just crossing above this level. I'm going to add some additional entries up here at this price point once we see a break above this level. Let me take a look here. So 64.40, 45, and 60. I just mark these on, bring this over here to my Top Step platform. You don't have to. Some people are just really easy and they're like, okay, 64.14. They don't have to do all this. They don't have to do all the labeling. That's not needed for them. If you're one of those people, cool. If you aren't and you get easily distracted in the market, just label your charts. There used to be like this big trend about like naked charts and only trading naked charts. And I had a student who was just like, yeah, no, I don't want all those. I'm like, why? These are indicators. These help you to stay. If you go and look at any charts from our friends on, Wall Street, trading with those banks, they have indicators and things on their charts as well. So don't think that you can just read the market or that anyone can just read the market, without any help there. Trust me, they have another screen or something open. Alrighty, and then our next point. Okay, so we have these levels here. Once the market reacts to those zones, let's see if we want to add and continue to add to this take profit point. Remember, all we need is 250 per day, 3 days a week, per month. Okay, so this is how I would set up my trade here. I have my wrinkle charts. I use that for volume to help me identify, what trend the market is, if the market is still in the trend that, I am currently looking at. And right now, remember we're about to be up on the 9 a.m. candle. So I'm going to have a little bit of fluctuation here. No big deal for me. Because I was already in this trade, not just jumping in. I'm only in with one contract, meaning every dollar that ES moves, I'm just making $5. Okay. How's everyone feeling? You guys ready to mark up another pair? Any questions? Let me go grab some water really quickly. I will be right back. Don't laugh at my shorts. All right. Okay, so let's go and head on over to YM. We'll do the same exact thing. We'll start fresh. Alrighty, so you guys help me mark up this chart. So if you can, drop these things in the chart. What's the overall trend on the 4-hour? Buying or selling? Up or down? Making significant higher highs? Yes. So YM is buying. Let's go ahead and mark up our charts and live times for the Dow before the New York Open. Our 9 a.m. candle is about to open here. Let's mark up this chart. Start from very bottom. So we want to get at least 3 months of data here. So we're in August. We can kind of go back. We'll mark up our lowest low here. Hello. One second, guys. All right, so 4-hour low. We have our low right here at 37.75. Just about. Okay, so we have our lowest point here, and now we'll mark off our high, which looks like it's about at this point at 45,387. Okay. And we have our highs and our lows here. Do we see any significant levels of support? We can go ahead and draw some support boxes. Just as we saw how we had that level of support on ES, and weeks later, the market still came to that point. I'll just keep it gray. Okay, so we had an area here. See this price point. So let's draw a line. Right, so this area was resistance at one point. It was resistance again, and then we broke here. So we can have this as a resistance area. So 43, it looks like it's 43,130 around that area. All right, so that was a high here, or an area of resistance, I should say. Let me mark this clearly. Hello. I don't know what's going on with my trading view. It's trying to tick me off. Whatever. Alrighty, whatever. This was resistance here. So we have this area where market's been using it as support. Okay, so we've broken above that area, continued to make higher highs. Now we're bouncing around. We're in a consolidation area right here, which is basically just bouncing around from this R8 to R0 on the 4-hour time frame from, let's see, when did it start? June the 16th, reaching these highs. So we're in this consolidation area. So you can definitely set some alerts here at this, above this high. So at 45, you don't want to get ticked out. So Um, well, it's just an alert. So you can just set it up here at 405, and one here below at 43,730. Just so that when price breaks out and makes a higher high, you're alerted. Again, there's a lot of orders sitting up here and a lot of orders sitting down at these zones. So it's just an alert, not a confirmation or a signal to get in or out of the market. You want to see how the market reacts once it makes a higher high. Is it just grabbing liquidity here? Might hit 45,508 and then bounce back down, and, have a pullback to our support zone. And same thing for once price touches this 43,730 level. Is it just going to grab liquidity as it did down here, grab those orders and continue on that buy and continue with the trend making higher highs? So we definitely want to have this kind of mapped out here to give you an idea of something major is happening in the market. Alrighty, same thing. Let's go to the 1 hour. Let's mark out our zones according to, okay, we had a small area of support here, resistance here. So if you wanted to mark those out on the 1 hour time frame, for instance, give me 1 second. All right. Okay, so if you wanted to, for instance, this level, this price point, 44,400, kind of just around this level. We had it being support, had a break of support here, resistance. Remember, these are hourly candles. So, we had a pop here where price was able, might even go up to this point. That might seem 44,486, kind of that level was used as resistance, kind of, as support here, resistance at this level. Buyers tried to break out of that zone. They were unable to, but then eventually they did. So this looks, as a really key level here to me, this price point. So remember, we're never exact. So 44,586, 44,500. You just know that, once the market comes around to this zone, we want to really pay attention on how it reacts. What about this area? This was an area of support. Charlotte, when you're marking up your charts, is this how you kind of go and do like that top down level? You kind of mark up those areas of support and resistance on different levels? Or, man, I miss Zoom. I'm always talking to myself on these daggone streams. You said, yep. Okay, yeah, perfect. Perfect. Remember when we were first learning top-down analysis and it was like, okay, how do we incorporate all of this information to make sense into scalping on the 5-minute time frame? Remember, y'all, that was just about, when was that boot camp? That was just last summer. And it was like, oh my goodness, I get that it's doing this on this time frame. What the heck does that mean to me on the 5-minute? And so I just love to see it clicking right now. It makes sense. Exactly. But it wasn't making sense then, it was. So that's why I tell people, stick at it. One day someone's going to explain it to you and your brain is just going to say, oh, that's what's going on this whole time. And then after that, you can't unsee it. You can't unlearn it. It happens. But sometimes you just have to hear it and go through the process. And I made everyone mark up your charts. Look at this on the 4 hour. Even if they weren't, trading on the 4 hour, just so that we can kind of go through those steps so that it could click. And then it did. I'm so happy to hear that, Charlotte. Alrighty. So again, right here at the R8, this 44, 117 kind of area, you can kind of, these, you use these as zones. I mean, your pivot levels as kind of zones. So you might put your line, for instance, at, if you're trying to find your key levels in the market, let's just say you can put a horizontal line here at the R8, which just so happens to be 45, 120. And then you adjust that. You can adjust it here, move it up or down so that it aligns with the actual candles. So use your pivot levels as your guide, but don't use those exact numbers. Definitely look to the left, look at your candlesticks and see. So all of this here, all this is just a big, huge. So yeah, lot of this would have been not very good to be in the market when it was consolidating here. Nice to be in the market when we have this nice range. Nice to be in the market when we, nice to be in the market when we have this big buy trend here. Nice, candles, full candles, thick candles, giving us that movement. We had some good selling momentum here, and buying and selling, kind of buying and selling. We could have kind of, been in the market at this point. But now when we see the candles kind of just, to the side like this, barcoding, they're kind of the same size, buys, opening as a buy, opening as a sell, kind of in the same area. We have these really small candles, not really giving us too much movement. This isn't really a good area to be in the market. Nice for these buys here. But this candle, imagine people who got in around this area thinking that the market was going to continue to buy. So this is when our RSI would definitely come into play, because we would have known, okay, we're overbought here. We need to be very cautious. Also, we're near the R8. If the market is still buying, cool, but let me secure my profits. Let me move my stop loss into profit at this area, because if it comes back down here, I'm expecting it to come back down, because it is, or not, I'm expecting, there's a possibility, a high possibility at that, because of the area that it is in the market, with it being near this R8 level. So we got to be very cautious. Right here, we had some support as well. Yep, had some support here. Price just kind of bouncing in between these levels. So be very cautious. This is again on the 1 hour time frame. So let's look at the 15-minute now, just to see if that gives us some more clarity into what exactly is going on, the lower time frames, what type of trade we should be in. And sometimes the market doesn't give us clear information, and we don't need to be in the market at that time. So we just want the confirmation. We just want to see. Okay, so now in the 15-minute, this looks a lot clearer, the support area. So what, 42,830 to 44,800, that level, support level on the 15-minute. Okay, now let's look at our pivotal zones. Right now, we're near our R8. That's an area that we're expecting the sellers to step in, bring our price down, as it did here on Tuesday. Of course, we had a liquidity grab. Remember, there are a bunch of different orders here. So when you get into a trade, you got to remember to set your stop loss, give it some wiggle room at those extreme areas, because liquidity can definitely, there's a lot of motion going on right at those areas. So you want to give yourself, a good space there. So for instance, if you entered, price got up here to 45, 50, 2 kind of area. So if you entered around here, you definitely would have wanted to look back to see where there was some kind of wicks here. So the next wicks were at this price point. Remember, wicks tell us there's a lot of orders there, key level. There's something down there that the market really needed. It pushed either buyers or sellers to that area. And so if we look here, we'll see that there were wicks in this area at 45,053. And that's exactly where the market came back up to. Those buyers grab those orders and then continue with that trend. So always take a look to the left at those extreme levels just to make sure. So what do I mean? Right now we are oversold, kind of coming down. We're still continuing to make these kind of higher highs, but we're near this R8. So if I was going to get into a trade like this, and I just wanted to get a couple points here, and I'm at this extreme level. So I would need to wait for a confirmation. So if the price goes above this area, then I'm getting in for a buy. If price goes below this area, I want to be in for a sell. It's 9:15. So remember, New York Open, those New York Open, all those orders coming in, it gets kind of crazy. But let's just say we're near this R8 level on the 15-minute. We're oversold. I'm going to preempt my trade, meaning I'm going to just set it up with a small contract here before I get the confirmation that this is actually what the market is going to do at this point. When you do that, you're really just thinking of your entry. So I don't always recommend it, but we always do it. So if we're going to do it, we need to have some type of rhyme or reason. So I want to wait for the market to break below this area here. Once it does, I'm going to move my stop loss a little bit above this higher wick to get into, the market for this sell. It seems like, though, this was a major area of support here. So what do you guys think? This could go either way because it's just been consolidating. I'm expecting it just to come back down here, touch this area, come back into a sell, and just continue to bounce around. But but there's any moment here that the market can finally break out into, a trend and give us that overall buy or give us that overall sell. So we're just waiting for that. Taking some clues from our RSI, that definitely helps us to kind of, stay with the momentum of the trade. Let's look at the 5-minute time frame. Alrighty, 5-minute time frame is near the R8 as well. We can throw on our EMA crosses, our 10-20 cross. So remember, the strategy that I use is a 10-20 cross. I get in, try to get in a little bit before the cross using my pivotal zones and my RSI to kind of give me an idea of, when the market is about to make those crosses for those trends. And then once I'm so then I know if I'm in a buy or a sell. So right now we have a buy cross here, but you're usually taking those crosses to the next level. So if we were in this trade right here, we had support, we were in this sell, the market came to this level, created this level of support, sellers were unable to move price below this level. We had, buyers trying to come in to make this cross and come back into this buy. Eventually, we did have that. Where are we taking the price? To the R8 level. Price kind of reached there. We're pretty near. We're never exact. So this trade idea would have been great. It's reaching that target point. But now at this R8 level, this is now where I'm anticipating a sort of a pullback. So you can do one of two things. You can, put your fib zone here, kind of mark out your R8, a 50, 61, 8 level. This can be your TP point if it breaks here. However, because we haven't, this would be a counter trend trade and just a pullback trade here. Right now, our nothing in this trade. We haven't gotten across yet. That's what I say, that it's preemptive. We're just going off of previous price action and patterns to, help us to identify a potential, entry into the market. Of course, if price breaks above this 45.20 level, we want to make sure that we're not having, it's not just a liquidity grab. If we hit a pivotal shift here on the lower time frames, that would be our indication that price is continuing to buy and that we should no longer be looking for this kind of pullback area here. US 30s. How do y'all feel about this? Is this a trade that you would be looking to? It's 9:20 now. So you have 10 minutes. If you're trading US 30, it's 9:20 about the New York Open. Are you guys getting in this trade, or are you going to let it play out and wait until after about that 9:45 that candle opens up to, see what the market's going to do? Let's take a look. Let's take a look at gold. Oh, every single month it puts me back on that same. I need my platinum plan. Well, we don't need 3 charts right now anyways. Cool. Okay, so US 30 here. On the 5-minute, we have our ES on this side here on the 5-minute as well. We're doing the same kind of trade. Let's see. If it doesn't break below this area, then we're not pulling back. For 1 minute. What do we get in here? 64.25. Okay. Alrighty, so we had a break above. Let's look at our ES. This is on the, let's look at YM. Let's look at the Dow. So this is on the 1 minute time frame. Let me move this out of the way. Okay, so candles coming up here to this R8. Let's see how it reacts at this point here. So it seems like it's just making higher highs. We'll see if we get a pivotal shift. And we have to remember, we're not in a trade yet. We're just looking to see how the market reacts so that we can, get a proper trade idea here. But it is 9:23. Hopefully this session has helped you guys just to gain some more information on passing your combine with Top Step, giving you some steps on how you would, formulate your trading plan to pass that combine, pass that Top Step challenge in 30 days. Looking at your max loss, your daily profit, how to set up your schedule there. We went over the rules with the consistency targets, how you would go about with your payouts and what the rules are pertaining to that. What else did we go over? Then we just practiced our strategy. We took a look at ES, which is S&P 5 any E mini futures, and we also looked at the Dow using our 1020 EMA cross in conjunction with our RSI and our pivotal zone indicators to help us identify potential entries and exits in the market. Alrighty, guys. Well, Charlotte says she's going to wait for 9:45, and honestly, that's what I would suggest doing as well. But while you're looking at the market and while you're waiting for, the New York Open to open in about 6 minutes now, you can see I would go to like the 5-minute time frame and just take a look at what's happening and just see if there's any structure that's broken. If it breaks your structure and you have that huge momentum and you don't have to wait till 9:45. If you see that, you can always put a pending order, small order in if it aligns with what you were looking for, because you don't want to miss your entry. If we've sat here for an hour, we're anticipating this to happen. Once we see it happen, we're not going to hesitate. We're going to place our stop in places that allow us to take a couple losses, but not blow our accounts, because losses are inevitable. Alrighty, guys. Well, if this was beneficial to you, you guys drop some like this video, share it with your friends, send some hearts, send some love in the stream, and I will see you guys again next week, Wednesday. We'll take a look at some more pairs. We'll go over our strategy. We'll practice identifying market structure, identifying our key levels, and all of that great stuff. We'll do it every week. And so I look forward to joining you guys again. Hit me up in the chat, Trade Love Academy Telegram group if you have any questions, if you want to drop your charts, if you're unsure about an entry or exit point, drop it in the chats. We're there for each other. We'll definitely make sure we have an amazing trading week. And again, thank you all so much. See you all next Wednesday.